Welcome to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Wednesday, July 19th. And joining me as always, Dr. Orphe Divounguy is a PhD economist, and he is going to take a victory lap. And apparently he's going to take this victory lap at my expense because I don't know how long ago it was at this point, maybe 18 months ago or so. I said, hey, you know what, Orphe, looks like we're in a technical recession.
Well, it was quarter one and quarter two, 2022. So it's about a year ago that, the U.S. economy contracted slightly for 2 quarters, but economic activity just was there, right? It wasn't, we saw it was basically just the arithmetic, right? Like the computation of GDP, but ultimately people were working. In fact, the U.S. economy was way too hot. People were working and activity was just through the roof. But anyway, and no recession then, no recession now.
That should be the title of this episode. That and Chris was wrong. Orphe was right.
Yeah, well,
no recession. Never was a recession. Not going to be a recession.
Yeah,
at least not right now.
Exactly. At least not right now. Recession risk is receding. We had the Goldman Sachs Current Activity Indicator, which just a great tool to keep track of activity in real time instead of waiting for the quarterly GDP figures. Up 0.8% in June. It was down 0.3% in May. So activity growth rebounding. And ultimately headline inflation coming down as much as it has, right? I mean, we were looking at inflation at about 3%, consumer prices 3% higher than they were a year ago, down from 4% in May. And down from like over 9% a year ago. I mean, the continued cool down has been really beneficial for everybody, for workers specifically, who have seen they've seen headline inflation cool, right? Along with supply chain improvements, along with lower energy and gas prices, along with a cool down in food prices, right? And so to see all that, and yet wage growth has barely nudged. And what that means is wages adjusted for inflation are actually higher, supporting consumers. And so, when you see this purchasing power increasing, you're no longer really concerned. I'm no longer really concerned about a looming recession. I start to wonder about whether or not we're going to continue to cool at the current rate, or if cooling is going to get stuck, or if maybe that disinflationary process is going to get stuck. And that's what I start to worry about a little bit.
Let me pause you there and ask you now, if that were to happen, and try to bring this into the parlance that you and I have used in the long haul here about, soft landing, hard landing, no landing at all. Make sense of that for us. I mean, if you say, if we're stuck, what does that mean? What does that look like? And if I'm just a regular person at home, which I am very much a regular person at home. Tell me what that means to me.
Yeah, well, let me add a couple of stats to make sense of this. So the first thing is retail sales data comes out and it shows the consumer still spending.
That's just fascinating to me that, that still that much money coming into the economy.
Yeah. Retail sales. So retail sales headline number missed expectations. So it's lower. Annual growth in retail sales down 1.5% from 2% in May, right? From a year ago, right? And so you see this cooling in retail sales, but when you look at core retail sales, if you exclude used cars, you exclude food and energy, you see that actually it accelerated. Core retail sales accelerated in June, up 0.6% after another upward revision in May. With the big surprise, a spending uptick on discretionary items. So now you see a consumer with increased purchasing power who was on the path, was cooling down, was kind of holding back. And now you see that consumer going back out and buying stuff, right? Not just spending on services, but also now spending on goods. In fact, the current activity indicator from Goldman Sachs shows that, manufacturing is less negative, right? You could start to see a kind of a maybe manufacturing having bottomed out already. And that combined with housing also having already bottomed and coming back up already on the rebound, you take all these factors and you basically see a U.S. economy that could potentially be growing faster, right? And so I wonder if we're going to have a summer where inflation could remain stuck, core inflation could remain stuck where it's at, where we may not see a lot of progress on the core inflation front. I look at consumer confidence also from the Conference Board, Consumer Confidence Index. It's at its highest level since January. Again, consumers feeling upbeat, having a little bit more cash in their pocket. The labor market remains strong, right? Recession odds are receding. The U.S. economy seems on solid footing right now. And I guess the question is, are we actually going to see more disinflation, at least core inflation coming down, or are we going to have to see a couple more rate hikes from the Fed?
We are going to see a couple more rate hikes from the Fed. The question is, when do they slot them in, and whether or not they're anything more than a quarter point.
That's correct.
This has all been telegraphed.
That's correct. And I think you're right. And I think it's probably going to still be a quarter point. But like you said, it's a question of how often are we going to see these rate hikes, and are we going to see inflation numbers surprise on the upside during the summer? Because we know people spend like crazy during the summer and all the traveling and all that stuff. So yeah, it's going to be very interesting, but this is where we're at right now. I mean, you look at builder confidence. Builder confidence is up, right? Residential investment has already bottomed, is rebounding. So you look at housing price indices, right? You look at the Zillow Home Value Index, and we had the strongest month growth in a long time in June. I mean, it's unbelievable how resilient the U.S. consumer has been. Really took inflation on the chin and just is carrying through, and could end up coming out of this whole rate cycle, this policy tightening cycle unscathed.
Yeah. Well, it's fascinating. And I mean, just one more victory lap for Dr. O. So we'll call it to a close there. For Dr. Orphe Divounguy, this has been the well-chastised Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americasdocking.com.